Hey everyone, Griffin here and welcome back to the channel where today we're going to be looking over an awesome tool that I like to use in order to analyze rental property deals, and that can be used to manage your rental property portfolio all within one simple to use platform. So whether you're new in the process of acquiring your first rental property or if you're adding your 100th to the portfolio, I'm sure that you know that analyzing deals can be quite time consuming without a streamlined process. So this is where Landlord comes into play, offering you a full suite of rental property analysis and management tools all under one roof. So you can say goodbye to the headache of juggling confusing Excel spreadsheets and drowning in Google Drive folders just to stay on top of your tenants and property's finances. Landlord makes all of this a breeze. And by the way, you can use the exclusive link down in this video's description to get 3 months of their premium membership for free to follow along. Let's jump in and take a look. Alright, so once you're logged into Landlord for the first time, this is the dashboard that you'll be presented with. And keep in mind here, I am currently logged into a demo account to show you the entire functionality because my portfolio's exact values are not something that I want to have public on YouTube. But in the portfolio overview dashboard, we can see quite a few elements about the portfolio's performance as a whole, along with a sidebar for the invest, manage, and finance sections of the platform. All right, so once we first arrive on the Deal Analyzer tab, this is what we're presented with. There's quite a bit of information, but we're going to go through everything and you'll see it's very simple. So up here, we can type the address of the property in question. I'm just going to pull something out of my head here, say 754 Bront Road, Oakville, Ontario. We'll just use that as an example here, but you would put the property that you're looking at. Now you can also input the postal code as well as notes about the area. So let's say potential long-term value add in Oakville investing with team. All right, as an example. All right, now from here, you'll be presented with these two upper boxes indicating first year metrics and long-term metrics for 10 years. And both of these are going to be updated in real time as you add information about the property in these 6 boxes down here. So let's do that right now. All right, the first one is the purchase price. So let's say you're able to pick this thing up for $650,000. All right, but the property value, let's say, is 700,000. Let's just say in this fictitious example, right? So 650,000, property value 700,000. All right, fine. From here, expected monthly rent. Let's say this is a triplex. Each one is going to be rented out for $3,000 a month. So $6,000 in monthly rent would be a good starting point for this example. Improvement costs, well, these are going to be renovations you're planning on bringing to the property, and this can vary greatly. In fact, for this reason, we can even click on enhanced working plan, and we can add a ton of new costs that we're expecting, and it will be updated into here. In this case though, we're going to add let's say $30,000 worth of renovations that we're looking to bring to the property for it to have that value of $700,000 in this fictitious example. Now to the right here under property value, we also have the land transfer tax. This is going to vary from area to area, but in this case, since we indicated that it is in Oakville, Ontario, based on the purchase price, it has given us an estimate of the land transfer tax, which is a pretty good sort of little handy tool here if you don't know exactly how much it will be. We'll leave it at that for now. And then closing costs, we can also add these including legal fees, appraiser costs, let's say $1,000 for that, the appraiser $500, title insurance, and you get the picture. So this is all updated in real time. Property insurance, let's say $1,500. Great. All right, so closing costs $3,000. And as we can see, everything in terms of the first year metrics and long-term metrics have been updated. Now below this, we have a very important box that is the mortgage details. So in this case, we're going to put an 80% loan to value as that is a standard down payment, 20%. All right, so 80% loan to value means a down payment in this case of 20%, which is $130,000 of the $650,000 purchase price. By the way, we can also click on this to update it, but we will leave it at 80-20. The mortgage rate is also, of course, an important factor. We'll put it at 6%. And again, everything is updating. We can also add an interest-only loan or principal and interest. We'll leave it at that for now. Outstanding loan, $520,000. That is correct based on the down payment. And the mortgage term years, we'll put 25 as a standard amortization period. Gives us a $3,411 monthly mortgage payment at the 6% rate and the 20% down payment on a $520,000 outstanding loan. Now from here below that, we also have the cash investment. So this is essentially calculating both the down payment as well as the improvement costs and a couple other things such as closing cost and land transfer tax, giving us an investment of cash on our part of $172,000. Up to the right, we also have some longer term assumptions, which is going to come into play for the long-term metrics over the 10-year estimate. So first and foremost, we have the occupancy rate. Now, this is going to depend, of course, depending on the market that you're in, the type of property, and so forth. We'll leave it at 95%, meaning about 5% of the time the unit would be vacant, which is relatively standard. Holding period, we'll leave it at 10 years for the sake of this example. And then we can input annual property appreciation, rent appreciation, and annual inflation. Inflation, even though it is very high right now, we'll leave it at 2.5%. And the annual property appreciation, we'll put it at a relative 3% here because this is pretty standard over the years in Canada. And annual rent appreciation, we'll put it at 4%, which right now, considering how much the cost of insurance, property taxes, and other costs associated with running a property have been going up, an annual rent appreciation of 4% is actually relatively standard and justified. Now, below that, we have monthly operating expenses. Again, management agent fee, we'll put 7% in this case. Utilities, let's say $300. Landlord insurance, maintenance, we'll put $50 a door, so $150 a month, let's say, and landlord insurance, $200 a month, giving us a total, actually other monthly costs, let's say snow removal, grass, all that, another $200 a month on average, $150, let's say, for a total of $1,220 in monthly operating expenses. And finally, for the operating expenses, we have property taxes, which are going to once again vary from municipality to municipality, type of property, the value of it, and so forth. We'll put 1.5% in this case for $10,500 in property taxes yearly. Now, what does all of this give us? Well, it gives us the two boxes up here being first year metrics and long-term metrics. Let's take a look at that right now. So the net annual cash flow based on this fictitious example where I basically just put random values would be $2,300. Gross yield 10.4%, and a cash on cash return of 1.35%, which of course isn't great. From a long-term standpoint though, we can see here that over 10 years, we would build $543,000 worth of equity, and we would have a long-term return on our investment, right? The investment being $172,000 of 289%. And if you want to see how that is all broken down over that 10-year holding period, you can click here and we can see all of these values. So this is really a great tool to go in, input values for each different property that you're looking to analyze, and it will give you some great metrics in a very quick manner. All right, now that we know how to use Landlord to analyze a potential property that you're looking into, let's head back to the dashboard so that we can get an idea of the other features offered for rental property tracking and management. Now, if we click on the portfolio performance right here, we're brought to the portfolio tab of the platform where lots of information about your individual properties is displayed and tallied up in this top information box. You'll notice the number of properties, market value of your properties, current loan balances, total equity in the portfolio, LTV, monthly rental income, monthly mortgage costs, and so on. And below this section, you'll also notice a row for each individual property, which is what's being used to tally up to the cumulative values that we just looked over. For example, the top property here located in Montreal has a purchase price of $277,000 and a current property value of $360,000, along with all of the property's financials that you'll input when adding a property to your portfolio. In fact, let's do that right now, clicking on this Add a Property button right here. Once you click on this button, you'll be presented with a pop-up box that asks you to first fill in the property's info, purchase details, and ownership split to get things started. I'll do that right now. After inputting this preliminary info, you'll continue scrolling down, adding information about the mortgage, the property's details, utilities, insurance, and other relevant information. That's all necessary for landlord to give you proper financial reporting of said property moving forward. So although it could take a few moments, make sure to input as much detail as you can. And once you're done, simply click save and that property will be added to your portfolio. From here, I think it's also important to note that you can filter the portfolio page by property, by owners, and ownership structures to make things simpler in case you have, say, a hefty portfolio. And you can also export all of the information to an Excel spreadsheet if necessary. Now, what about if things change over time for a given property and you need to edit its information? Well, it's as simple as scrolling down to the property in question and clicking on Edit, which pops up that same input box as earlier. And by the way, each property has its own property page that highlights information related to the location, photos, financial details, uploaded documents and leases, profit and loss analysis, and property growth over time. I really wasn't joking about how thorough Landlord is as a property management tool. There's so much value here, and we haven't even seen it all yet. The next section that is absolutely crucial for a property management tool is, of course, the tenant section, which allows you to input and track information about your tenant leases, conditions, and other information, all of which is tied to a given rental property in your portfolio. So as we can see here in this demo account, the portfolio currently has 13 tenants, of which the information relating to their lease terms and conditions are also highlighted as follows in rows. And you can click on each tenant to see more information about each one. Now, this of course is a very important feature because Landlord will remind you of when each tenant's rent is due, allowing you to stay on top of late payments. And as you mark the payments as received, your entire portfolio income is updated monthly. So there we have it, a comprehensive guide on how to analyze and manage your rental properties in 2024 and beyond using Landlord. And hey, it's your lucky day because if you're interested in signing up for Landlord to access all of these features yourself, you can get 3 free months of their premium service for free when signing up using the exclusive link down below in this video's description. So thanks a lot for watching today's video. If you enjoyed it, please make sure to drop a thumbs up, subscribe to the channel, and on that note, I'll see you in the next one.